exactly sell your shares? We talked about buying. When do you buy? You buy, of course, when you have the least price range around the time that you want to buy in the last 3 months. And this is what I said that is the time that you sell, the time that you buy, the lowest price in 3 months. And of course, you have studied the share and you have checked a few shares here and there. And if you do not know how to buy, I've shared that in the video that you'll probably see in the link above. But when do you sell your shares? The first time that you sell your shares or think about selling your shares is when you have identified the next share to buy. Remember the criteria for identifying? If you identify the next share and it is among the lowest prices that you have currently in the last 3 months, and the volumes that are being traded in the market are in the volume that you desire, then you confirm that you're going to have a share to buy. If you're not investing new money there, then probably you're selling what you already have in holding in another stock. And if this stock is among the higher prices in the last 3 months, then you sell and then you buy. So when you only sell when you have something that you have identified. Otherwise, it is money that is going to lie in your brokerage account, is not going to earn you any value. And remember, it is money that is not owning any stock, so there will not be any dividends being received. So you want your money always invested. So you only sell when you have some identify something. Then you only sell the other reason if you have the highest price currently in your shareholding in the last 3 months. And the third reason is if you have reached a certain percentage of value in your stock portfolio that you have desired. For example, if you've said the least return on investment for me is, say, 10% per month, or maybe 20% for all the period I'm holding a share. If you get to that level, then you sell because you are only doing it in policy. Remember, there is no emotions with investing. Don't think that, oh, I love Safaricom, oh, I love Bamburi, oh, I love this company. So you just hold it perpetually. Unless your idea of investing is buying and holding, in which case maybe this is not the video for you. But if your desire for holding and owning shares is to gain value and create wealth, then you will be buying and selling, buying and selling. You will have no emotions as regards to just holding. So when you get to that percentage that you think is good, you sell. For me, it is always 18%. 18%. Why? Because 18% in the period will probably gain me a good value. So even if I'm going to pay charges for selling and buying and currency losses and things like that, I will still be able to make a good return of, say, 15%. So when it is at that level, I sell. My best target has always been within a month or within 3 months maximum. So if I'm holding a share and it is not reaching 18% in 3 months, then that is probably not a good share to hold. In which case, at the most available convenience of getting to that rate I want, I will sell and probably reconsider buying that share in the future. So you have identified your share that your next share you're going to buy. You have reached the percentage return that you aspire to get, and you have determined that it is at the price range that you want. So it is among the lower price ranges so that you have a possibility of an upswing. The fourth and final time that you buy shares, especially when you're investing new money, is understanding the cyclical events of things. One thing that I have noted with the stock market in Kenya happens regularly often is in January, people are selling shares. And I wonder why people selling shares. So if you want to buy and you have new money, hold your money and buy in January. Why? Probably, and this is just a probability, a lot of people do a lot of bad spending or spending on assets in December, and in January they don't have money. Also, a lot of expenses are increasing in January. People are paying school fees for the year for their children, so probably somebody will sell their shares to be able to do that. Probably somebody thinks that I've already reached a certain date when I can still acquire dividends. So they wait until the end of the year, previous year, so that they can acquire dividends and be paid for the dividends that they hold as at the 31st of December. So by January, they are selling because they have already reached that time they're receiving a dividend. The other reason could be that people are broke and they want new money, they want more money. So they sell some shares so that they acquire certain amounts of money. It could also be companies that hold and invest in shares have made certain adjustments and decisions in the year, and they are just implementing what they have determined. For example, a company that invests in other shares, an investment company, say like Center, may say, we desire to own more stock in say housing finance and other like real estate or REITs and something like that. So they want to increase their portfolio in a certain level, so they decrease their portfolio in a certain level. But a lot of investment decisions that affect shares downward happened in January. So if you have new money and you want to invest, the best time to invest is in January, February. Why? People are making these decisions. The worst possible time to sell is going to be probably September, October, November. Why? Because people are now catching up with their financial decisions that they made or financial claims that they made. So they are now putting money into shares because they had made a new resolution of investing more. Some people are receiving bonuses, some people have excess money here and there. And the shocks of January and February, March have now been sufficiently catered for. People have new jobs, new opportunities open up September, October, November. Companies are spending more money. Why? Because they had budgets, and because they have reached September, they're like, we need to spend this budget. We need to have this money invest in this thing. So there's a lot of money in circulation in September, October, November, December. After that, then it goes. So money in Kenya and the Nairobi stock market is affected by this cyclical event. So if you're able to know certainly certain things happen in a certain way, you can also take advantage of bringing your new money when people are selling, so that you take advantage of the lowest price on offer. The other last and final reason, and this affects most corporate investors in any pending news about a company or any pending news about an industry. So, for example, the parliament in Kenya passes a law that is going to affect, say, the construction industry. Maybe there's a new tax on cement. So cement companies may not be able to make as much profit because their products have gone up in value. So the next person trying to build will reconsider, do I need to invest in real estate? So the prices of these shares go down because the policy against these companies is in a way that is going to restrict some of their products, maybe increase their prices. So corporate clients or corporate investors, people who invest huge chunks of money, make sure that they have their ears on the ground. What is happening? What policy is happening? What is affecting this? Then they're able to react as regards to that matter. However, this is only limited to corporate clients who have people who are dedicated to look for this information. Sometimes also it could be what is happening in the international markets. So, for example, if in the international markets things are not working. Maybe in some countries closer to Kenya, maybe South Africa, Nigeria, the markets are crashing. This is an indication of an overall structural adjustment towards a realization of lower prices in the shares. So a lot of companies now sell. Why? Because they want to have more money so that when the prices go down, they can buy more shares later. So because of this, prices tend to dive because corporate clients are reacting to this situation. So when you have new money, you do like the corporates. When they are selling, you sell, then you buy later. Not keep money and just eat it, but you buy when the prices again go down. Why? Because if you are going to sell a Safaricom share at 15 shillings, then the market is going to dive down to 7. Then you have two shares in this month, but if you held it, you still have one share but undervalued. So you sell when you have an anticipation that you're going to lose value because of what is happening in the overall market. So I've talked about when to buy. So if you're the kind of category of people who buy to hold, maybe this video may not be able to apply to you, because for you, you are looking at the overall gain in the stock market. Because on average, the stock market will continue gaining in value over a period of time. There was a study that was done in the New York stock market that prices increase over time on average around 7%, whether you do nothing about them. So as long as you hold shares, whether they're going down, up, as long as you do nothing and you still invest, it is going to go up averagely by 7%. So you still gain, but you may not gain these returns that come from cyclical events, changes in prices, reduction in prices, and all these events which the average trader may be able to make money from. Remember, I am not a day trader, but I am a monthly trader. And the average person does not have the time or capacity to be doing investments every day and selling shares every day. So if you like this video, give a thumbs up. What do you want me to share more in terms of the stock market? What can I be able to share to help you in your investment journey? I have a link down in the comment section. If you have not invested and you can be able to start your investment in the stock market by as little as 100, because if you get a share that is less than a shilling, you can buy 100 of them and you will be able to invest 200 shillings in shares and start now. Click on the link below and you can start investing through faida, which is one of my preferred brokers. I hope you like it, you share it, and you are kept informed. Thank you and enjoy your lovely